right, hello everybody. This is Tom Randall from Golden Care. I want to welcome you to the webinar today. I know your time is valuable, so I will go ahead and get started. Hopefully we'll have a couple more people jump on as we're going. I do have us in presentation mode, so I can't hear you yelling at me yet. You can make all the noise you want to in the background, and I'll open it up at the end for questions. That being said, I'm going to jump right in and tell you what, it's pretty exciting to talk today in this industry because I've been doing this for a long time. 21st year here at Golden Care, and one of the things I've seen is this is a constantly changing market that we're in, and it's kind of been interesting for me to see some of the new types of products that have come on, and that's why if you look at the screen there, you can see some of the support tools we offer here at Golden Care, and hopefully if you're not already on board, you'll jump on board to take advantage of some of those things, because not only do we have the usual suspects like StrataVision absolutely free for our agents, and the CSG actuarial tool, which is a great one if you're into the med subs, etc. We've got some really nice, unique, and proprietary products like the LTC CEO selling system to help you out in the trenches out there. So lots of good things. I'm not going to go through them point by point. But if you look at that top bullet, one of the things you'll see on there is the perfect portfolio products. And basically what we have is this industry's changed. If any of you are wily veterans on the phone there, you know that in the old days we could get by. We got tons of leads, you mail it out, you get a great percent response, and you go out and you meet people and you see if they want long-term care insurance. And we know this industry has changed. We know nowadays you need to have other products, not only because of the underwriting stance, but because of the way this industry's moved. We know that sometimes it's nice to have a product like CareShield that I'm going to talk about today from Minnesota Life for those folks who are maybe healthy enough to get long-term care, but maybe they're just not willing to pull the button, pull the trigger, if you will. So there's a few things that might be a stumbler for them. So I'm going to jump right in and talk about this product. We're excited about it because it has some nice things that nobody else out there has. I'm going to talk just a tiny bit about Minnesota Life, show you that they're a monster out there. I'm going to talk about the product overview and some of the competitive differences, and then I have a bunch of slides at the end that I'm going to zoom through, so you'll probably pull your hair out. But basically, I just have those on there for future reference, so you can go on and see how easy it is to get on the website, how easy it is to find quotes on the website, etc. You're going to get all these slides based on the email that you signed in with, so you don't have to take copious notes as I go through. Okay? And again, like I mentioned, I'll open up at the end for Q&A. That being said, when you're talking about a product like this, you're going to hear me say it over and over again. It's very simple, but it's got great guarantees. This is a long-tail product, right? This is an end-of-life product. When you're talking about long-term care and products like this, you need to make sure you have a carrier that's committed to the industry. And Securion's certainly there. Minnesota Life's a Securion company, and you can see it's great Comdex rating, great ratings across the board. So you're not going to have any worry about a big carrier like this with deep, deep pockets. They've been around for 135 plus years, I think 136 years now. They've been profitable every year they've been in business. And I think they have like $1.2 or $1.3 trillion of life insurance on the books. So it's big numbers, big pockets for a company like this. So you can feel comfortable, at least as you're meeting with the carrier, or the consumer, that you don't have to worry about that. Let's take a bird's eye view of the highlights, why you should have this product in your portfolio. The first thing that we like about it, this is a life chassis that has that chronic illness benefit on there. And that's the nice part about this is simple and guarantees, right? First thing is annual premiums or monthly premiums. Continuous pay is basically what I'm trying to say there. It's not just a single pay or a very limited pay policy. That kind of narrows your playing field, doesn't it? With a product like this, you can really expand your market. Anybody basically can do the monthly or annual premiums on an ongoing basis. That's one of the things we liked about it. The best thing we liked about it is the simple underwriting and the guarantees. The rates are absolutely guaranteed with this product. So if you get somebody out there scratching their head or they've done too much Google searching on long-term care and they're a little bit worried about rate stability, we know we can walk our way and talk our way through that and explain and educate people about traditional long-term care being more stable today, etc. But with this product, you don't have to. This product's just guaranteed. It's contractually guaranteed up to age 120, so you don't have to worry about that. Same thing on the benefits. One of the beautiful things about this, and one of the things even the wily veterans out there sometimes hit a stumbling block in long-term care, is when you hit the use it or lose it concept, right? With long-term care, it's pure insurance. It does things nobody else out there can do, but if you do end up being healthy and dying in your sleep years from now, etc., this product is a true insurance, right? With long-term care insurance, if you don't use it, you're going to lose it, or maybe get your premiums back with return of premium if you etc. Okay? With this product, it's always going to be there. Live, die, or quit. You'll hear me say it over and over again. This product is there for you. There's really only one decision to make with this simple product. How much benefits do you want? You have a face amount on the life side of $50,000 to $500,000. So if you want a bigger policy than $500,000, then you might look at some of the other Minnesota Life products out there. They've got some good ones that'll go up to huge amounts of insurance, but this is more for this niche market, $50,000 to $500,000. And if you end up getting sick at some point, it pays at 4% of the base amount. Okay, so 25 months worth of benefits there. So the nice part about that is the simplicity again, and it's a cash benefit. Regardless of any other insurance out there, regardless of what's going on, if you hit the benefits of this policy, it's 100% cash benefit. And we'll talk about how powerful that is throughout this short presentation as well. If, God forbid, your doc says, hey, you know what, Tom, boy, you're at the end of the rope here. You've got less than 12 months to live. This product will pay the full face amount. They'll hold on to $10,000 of it until you actually die, and then it'll pay that at death. And even if you don't get sick or have a terminal illness, we talked about the living and stuff. If you die, you have the death benefit. So if you do die, no matter what, if you use some of the chronic illness benefits or none of them, the death benefit is always there. It's dollar for dollar on that chronic illness. We're going to talk a little bit about the fact chronic illness is, remember, if you're paranoid about, chronic illness, you have to be permanently ill, etc., same exact triggers we have with life insurance, with long-term care insurance. So you don't have to worry about having any smoking guns there. Death benefit's always there. We talked about living. We talked about dying. What if you want to quit? This product has that as well. It has a built-in return of premium feature that you can get a percentage or all of your premium back based on what time you decided to cash out if you need to. 50% at 15 years, 75% at 20 years, or 100% at 25 years. Okay, so nice part about this. And again, I'm not going to talk deep about this. We usually have a pretty targeted market here on these calls. People are in the long-term care trenches. So basically, I'm not going to beat a dead horse here. We know the long-term care landscape has changed, right? We've had some increasing rates on some of those legacy blocks of business. We know that those rate increases are out there, and some people are bummed about them. We know there's people out there who can't get over the use it or lose it concept. Nowadays, products are very complex, aren't they? There's a lot of moving parts to long-term care products. So we know with the underwriting, it's as fun as ever, et cetera. So basically, you guys know, fewer companies, fewer agents, confidence of the consumers isn't at an all-time high. So we've had less sales. It's certainly picking up the last couple of years again, which is great, but we've seen that long-term care isn't selling like it was back in its heyday because of some of these different things going on, right? The nice part about it is we're in America, so this market moves. You see the growth of these alternative products out there. We've had combination life and annuity and long-term care plans out there, whether you call them hybrids or linked benefits or asset benefits, asset-based products, etc. Basically, they've been out there for quite a while, really becoming more popular now, right? Sales are increasing. When I say in some circles, not others, we see a lot of these products still that we got to watch out for as agents. Is there's a lot of life products out there that just have this little rider on there, and it's sometimes the old rider for the chronic illness rider where they do have to be permanently disabled. And some of the people out there are still selling products where they're not really giving them great protection on the care side, but they're telling people, yep, I got you covered on that. I threw it on your life policy, etc. So sometimes they're not covered as well as they'd like to be, so be careful of that as an agent. But long story short, basically what we're seeing is more asset transfers, a lot of single pay products out there, etc. And sometimes we see some complications out there, right? I talked already about the chronic illness rider definitions, the 101G riders. They used to say you had to be permanently disabled. That's a huge negative. So everybody bashed those and said you better get one with a true long-term care rider, the 7702B rider. And that's great, but now they did change the law, so now you can have a chronic illness rider, the 101G, that has the same triggers as a long-term care rider. And that's what we're looking at with this policy. Okay, so don't worry about the permanent disability. Basically, in a nutshell, what we're trying to do with this Securian or Minnesota Life product is take some of those obstacles you're seeing out there. If you're in the trenches, you know they're there, and turn them into opportunities. Because CareShield really is a great, simple, guaranteed product. This graphic you see on the screen there, we talk about it as being our elevator speech. It's in the illustration software. It's in the brochure. And it basically shows you just how powerful and simple this concept is. Your client pays ongoing premiums, monthly, annually, whatever the case may be. And if they die, obviously it's a life benefit. That death benefit is always there for them, that face amount. If, God forbid, they get sick, chronic illness, no problem. 4% of the face amount will be paid out on a monthly basis, and that adds up to 25 months. Easy math. Terminal illness, remember, doc says only 12 months to live. You get the whole face amount back, less $10,000, and they give you the $10,000 once you actually die. Again, easy. We've talked about living, talked about dying. If you want to quit, it's there too. This product, Live, Die, or Quit, is there for you, and it has that built-in return of premium. After 15 years, 50% of your premium's back. After 20, 75% back. After 25, 100% back. That's what we like about this plan. It's very simple. Again, these slides are more for future reference, but just to remind you really quick as an agent, continuous pay versus single pay, so more people you can cover with this policy. Guaranteed premiums for life with built-in rope. We talked a lot about that already. Talked about chronic illness benefits provided regardless of any other care out there. That's a huge deal. 100% cash, huge, because it's so flexible. People like it. Remember, we talked about the condition doesn't have to be permanent. No back-end adjustments based on life expectancy. This is just to confuse you, but tell you what, there's some companies out there that have these linked plans, and they sound great, and then the client says, oh, that sounds really good. You got me covered if I get sick. What happens, or how much does it pay if I get sick? And then you look at them and you say, well, I can't really tell you today because it's based on what time of your life you get sick, and then there's some algorithm that does a calculation based on your life expectancy and blah, blah, blah. At the end of the day, there's a lot of agents who don't know for sure what they're selling because it's a little confusing, and certainly clients are scratching their heads going, I don't even know for sure how much benefits it'll pay if I get sick. This one, cut and dried. We know how much the premium is. We know how much the benefits are at the time of the app. Okay? No long-term care or C to worry about as an agent. We don't have to talk about that probably. But basically, we know people are out there. And again, I'm not beating a dead horse, but we know people are worried about the premiums. I talked about that. There's people worried about the use it or lose it. There's people who just say, I want a simple product, something I can understand that's going to cover me. They want the option to get the money back. We know we just went through a period where a lot of people's nest eggs weren't growing as much as they would like them to. We want a product that you can say, hey, you know what, if you got to bail, all of a sudden you realize my nest egg is not quite as big of a nest or an egg as I'd like it to be. I'm worried about just living long enough. I need some more money. You could cash this in if you absolutely had to. Okay? Most people won't, but it's there. And again, people are looking for continuous pay. For some of these hybrid plans out there, there's a lot of them that are just lump sum, so people like that. The big key I'll try to tell you today, without getting too deep on the soapbox, is the biggest thing I can tell agents, and I've really tried hard to push this, is don't you make the decision as an agent. I see too many agents out there with flag waivers one way or the other saying, oh, I hate those combo plans. I never sell them. I sell traditional long-term care. You got to have that inflation protection or whatever. Or you see on the opposite side people who say, boy, I can't believe agents are still selling traditional long-term care. What if you never need it? You got to sell only these products. What I'd like you to do as an agent is to help your clients. There's a ton of them out there who need our help as agents. When you get to the point where you see they're healthy enough to get this product, and a lot of people aren't, you know what? Start out with some of those other products we have in our perfect portfolio, like the GTL home care plan or critical care or critical cash, whatever the case may be. We have products there for people who aren't healthy enough. If they're healthy enough, then we say congratulations. God, great news. It looks like from what I've heard, you guys are healthy enough to get this product, and I can get you some really great protection, what we call our premier protection plans. We can get you our traditional long-term care. We've got the top company out there, Mutual of Omaha Long-Term Care. Or we have what's called a hybrid policy or a life policy that has chronic illness benefits built in where we can cover you if you get sick on that side too. Some people like one, some like the other. Let's find out what works best for you. Should we? And you ask a few more questions. That's how easy it is, and that's the beauty of really selling without you making the decision before you know what your client really wants. All right, excuse me. This one is obviously, this slide I wouldn't show to my clients. It's built more from CareShield's perspective, obviously. But it's talking about the fact that it gets the job done like traditional long-term care. Traditional long-term care does have inflation built in that you can buy, obviously, as a rider. CareShield doesn't have the inflation, but it has all those guarantees and everything else we talked about, the built-in return premium. So, again, side by side, I'm going to show you one thing that is a huge plus on this plan is cash. Everybody talks about, well, don't worry, my client has deep pockets. Cash isn't that important to them. And you know what? I say baloney because we see it. Mutual of Omaha sees it. They're the number one writer of long-term care for a reason. It's because they have that flexible cash benefit. You know what? When you have that flexibility of that cash, that 40% cash in our custom plan, it's a huge deal. Everybody says, it's not that big a deal for my client. He's got millions of dollars stashed away. But you know what? When it comes time to claim time, 72% plus of people go and start with the cash, whether they have deep pockets or not. They start with the cash because it's flexible. They can use it for anything. As they get sicker, they maybe switch, but most people don't. Okay? Long-term care, if you look at the percentages, most people stick to the cash, don't they? Because they know that flexibility is kind of nice. They like the idea of having it to use it however they want to. With CareShield, this is 100% cash, not just 40%. It's 100% cash, and it's really a big deal at claim time. So make sure you as an agent remind clients of the power of 100% cash benefit at claim time. Okay? Get off my soapbox. Let's look at CareShield versus traditional long-term care. 59-year-old female, preferred non-tobacco. Before I go any further, I'm going to remind you of a little thing that's pretty subtle that a lot of agents kind of scratch their head and said, I never thought of it. What's our primary market for this plan? Females, right? It's a life insurance plan. What happened with long-term care? We went to gender rates, right? Because us men play nice and we die off, but the females live longer, so they fill those nursing homes, don't they? A lot of females in the nursing homes, so long-term care pays out lots of claims to females. So they raised the rates for the females at claim at application time, right? Flip it over to life insurance, and we all know because we want to die early, us males get hit on the life insurance side. So our best market, you can sell this product to anybody, couples or singles or whatever, but our best market, our hot zone, is those females, and we know those are some of our main people we're looking for to cover on the care side. So CareShield's a good market for females. 59-year-old female, preferred non-tobacco. You can see a side-by-side here. Again, this is why I say one plan isn't better than the other. I don't have a crystal ball. I don't know what's perfect for you, but let's check it out. CareShield, $125,000 face amount, $5,000 a month. That's that 4% we talked about. Annual premium, $27.87. If I looked at the leading long-term care carrier that sounds like a cow, Moo, we have $125,000, $5,000 monthly benefit, 3% compound. It's going to be $25.08 for an annual premium, a little bit cheaper. Okay. Now I talked to my clients. I found out they're healthy enough, and I'm saying they both have advantages. You know what? Long-term care, that's got that inflation in there. This product grows with you as you get older. That's a strong benefit, strong thing with this. But we don't have any contractual rate guarantees, etc. On the flip side with CareShield, we've got that thing we talked about. Live, die, or quit, the product's going to pay no matter what. So you know if you're paying those premiums, at some point it's going to pay no matter what. But we can't have it grow with inflation. It's a set policy. Which do you like better? Okay? Just to show you that you're going to get these slides later down at the bottom, that confusing stuff where it says no rope included. That just means the 2508 didn't have the return of premium benefit. If you added that into this LTC policy, it would go up to $3,331. That's the return of premium saying if you die, it'll pay back the premium dollars. And over here on the left-hand side, obviously if I had more premium dollars to work with, $3,331, I would be able to sell a bigger CareShield plan. So that's just for you as an agent note to let you know. Okay? Let's go to the next one. CareShield versus traditional. 51-year-old female this time, preferred non-tobacco. CareShield, $200,000, $8,000 is 4% of that, $3,000, $3,096. And on the right-hand side, you see there's our long-term care carrier. It's got the inflation in there, but it's a little bit more expensive, $32.46. Again, same arguments, and that's the beauty of this. And what I want to tell you is, if you bash one of them, like some agents do, boy, they're out there. Oh, why would you ever buy a Link product, or why would you ever buy long-term care? You don't know. All of a sudden, you get somebody who's going, boy, you just told me I should never buy traditional long-term care. I like that inflation. I'm not going to buy from you. You know what? You didn't help that person if you walk away. That's why when we talk about it here at Golden Care, we see when you get in front of a client, you're spending your time, we want you to not only make some money, but mainly help those people, right? Give them something that they're going to buy. Give them something that when their head hits a pillow, they feel good about. That's the best way to go in and approach folks. And again, CareShield's so simple. It's easy to sell it side by side with the other long-term care plan you might be presenting. Okay? Nice thing, too, is CareShield, because it's a big company and it's a life product, it's approved almost everywhere. It's not going to be in New York probably anytime of the other states, feel free. Okay? This next area I'm going to go through a lot quicker because this is going to be more for your future reference. Excuse me, I will talk about a couple things as we go through it. Basically, the website's there. There's lots of good marketing materials. They've got some great brochures, great different online apps or product quoting software, etc. Lots of good things for you that you can get from their website. And you'll see on these next slides exactly how to go on and take advantage of them. Okay? So, that being said, I'm going to go through this really quick. Don't panic on this call because you'll get these slides later on. You can type in that confusing little line there that'll get you right to the right login page. Or if you're like me, you want it simple. Securian.com, go there and click on Financial Professionals. You'll get to the same login screen. Now, first time you get on here, it's going to say you want to log in, you got to register. Now, here's the thing a lot of agents don't realize. They think, oh, registering is going to be a pain. I got to be appointed first. You don't. You can register right away. It's very easy to do. You can go on there and click registration. And when you get on there, you're going to see it's going to take you about a minute and a half. Okay? All they're doing is asking your name, a couple security questions, password, etc. Easy stuff. Once you submit it, you can go into the site and play around. You can see the products. You can go down and see where the applications and forms. And this, again, is all these different things are mainly just for future reference to show you. So don't panic when I'm going through this really quickly. Okay? If you're doing an online illustration, you'll get to this slide. You're going to see CareShield Simple, Universal. You're going to get on there. You're going to click in some information. All you have to do, remember, is your face amount. It's that simple. In this case, $150,000. If you wanted to, and you for some reason know exactly how much premium they want to pay, you can put the premium in, and it'll calculate how much face amount you can get for any given premium. That's, again, to have those guarantees all the way up through 120, right? Once you do that, you run the case, and you'll get a nice agent's eye view. This shows there's your 150 death benefit, there's your premium in the middle, and your $6,000 monthly benefit for the chronic illness, okay? You can view a presentation, and the reason they call it presentation is, unlike a lot of life plans like this, they have 45 pages in an illustration because they have all these assumed values, guaranteed values, all these different things. With this product, it's very simple, and that's what we like about it. You can see here 13 pages, and that's not just the illustration. That's a full presentation that's going to include some additional things. So there's not a lot of moving parts to this, which we like, and your clients like too, because they're not scratching their head wondering if you're telling them the truth, etc. Okay? So if you get to this point, you can go ahead and print it. You can go ahead and view the full PDF. This open forms button we'll talk about later on. But basically, if you were to open up the presentation or the illustration, whatever you want to call it, it'll show the face amount, it'll show the monthly benefit, it'll show the terminal illness benefit, it'll show the return of premium benefit, and it'll show the premium. Really simple stuff. There's that chart we talked about. There's your elevator speech. Again, right inside the illustration, shows you exactly how the CareShield product works and how simple it is. Now we talked about the find forms deal, the open forms button. Again, this just shows you how easy it is to go on and get paper applications. If you wanted to, you can go right to Golden Care and we'll get them to you, but you can go right on there and get all that information. Also, these other slides, again, just to pull your hair out and make you miserable, these are for future reference. You can go through and you can look at product highlights right on there. You can look at product details. You can look at living benefits. You can look at different agreements. It's going to talk about the fact that the waiver premium agreement is a little bit different because it's a life policy. There's two waiver premium products in this. The first one, the one you're worried about as a long-term care guy, is if I go on claim, do I keep paying premiums? The answer is no. If you go on claim, it's automatically your premiums are waived while you're on claim. But because it's a life product, you have to offer this waiver premium agreement. So it's in there. And basically that's talking about life insurance things, saying if you get disabled at certain ages, you don't have to pay your premiums, etc. And that's a rider. Okay? So rest assured, you are having built-in waiver premium while you're on claim. Okay? Again, this is future reference. If you want to run an illustration, you click on there, show you exactly how to do it on all these slides, and it's very simple because there's not a lot of moving parts. I go over to the CareShield Universal Life area, and I fill out the information just like I would, show my face amount, etc. It's very easy. Okay, if you have any problems, guess what? Golden Care is here to help you as well. Because it's so easy, a lot of us are carrying around these little mini computers in our pockets. Everybody in this call, I'd almost guarantee, is they have the mobile app. And the mobile app is really simple. You go to CareShield and you get this mobile app. Because it's so easy, you put in the nearest age of the person, the female or male, whether they smoke or not, put in their face amount or their monthly benefit. It's a sliding bar, and you'll immediately see your return of premium amounts and your premium amounts. Very, very easy to do. Okay? A lot of people like that because they can easily see just how much it is very quickly at any time. Okay? That being said, I'm sitting here about 4 minutes before my 30-minute mark. So I did my job getting off stage for you. Before I open it up for questions, I do want to make sure I earn my money and do my job for Golden Care. I can't stress enough, if you're not already appointed with Golden Care, take the next step. That's the one area we can't help you with. You got to help yourself so you can go out and help more people out in the field. So if you're not already appointed, go to our website, goldencareagent.com. Call us at 800-842-7799 if you have specific questions about underwriting cases or something like that that are a little deeper than we want to get into today. We certainly can help you one-on-one. We got a great team of RDs. We got a great team of licensing, commission staff, et cetera, that can help you. Basically, at Golden Care, we don't just throw you against the wall and hope you stick. We offer you great support. And that's one of the things we're very proud of and one of the reasons we're a leader in the industry. We got a great portfolio of products, and on the right-hand side of this screen, you can see all the different things we have. Check them out. Ask about them. If you didn't know we had discounted E&O, it's a great deal. Get E&O through us and get it at a discount. We've got care options and some different things that will knock your socks off that you probably aren't aware of that you can see on our website as well. Okay? I'll get off my soapbox again.
The conference is now in talk mode.
All right, now we're in talk mode so we can hear you. And if anybody has any questions, I'll do my best to try to answer them today or find out somebody who can help you. Anybody have any questions?
What about 10?
All? Go ahead.
Yeah, what about 1035 exchanges, where someone has cash value and another permanent policy moving it over to a CareShield?
You know what? With the 1035 exchanges, basically, I don't know if CareShield is the absolute best answer for you. I know that there are other products with Minnesota Life that do it. The problems with 1035s on the monthly, sometimes it's harder because you try to get it moved over and you run into some stumbling blocks. So far, we haven't done a lot of it. Theoretically, they're supposed to be set up, and for sure Minnesota Life has other products that do it a little bit better on a bigger asset chunk basis. So I would probably call in on that and have one of our regional directors walk you through other options on that. So thank you. Anybody else by any chance? All right, well, I'll tell you what, again, this is Tom Randall from Golden Care. I really want to thank you for spending some time this afternoon. And hopefully at least this gave you a little bit of a carrot. I know anytime you see something for the first time, it seems like there's a lot of moving parts, but this is a very simple concept, and it's a very simple product to work with. So please give us a call. Please take the